If you made more money this year and didn't set anything aside for taxes, we need to talk. Hi, my name is Carla Calderera. I am one of the managing partners at Upfront CPA. And in this video, I'm going to speak to you about estimated quarterly tax payments and why they are important. A lot of people don't know that taxes, the IRS expects you to pay the taxes throughout the year. That is correct. Taxes are paid throughout the year. They're not paid in April. In April is when you do your tax return, and if you overpaid in taxes, you receive a refund, or if you underpaid your federal income taxes, you have to make a payment at that time. But you are actually making estimated payments throughout a year. And if you are a business owner, you want to make sure that you are in compliance with the IRS, and that is exactly what needs to happen. So, the biggest mistake high earners make is ignoring quarterly tax payments. If you are a W-2 employee and you have federal taxes being withheld from your paycheck, you are already making those estimated payments throughout the year as you receive those paychecks. But a lot of business owners think they'll deal with taxes later in the year, but that's inaccurate. That should not happen. You should be making estimated payments at least quarterly to the IRS. If you are not receiving a W-2 through your business, this is especially important for you, and this will affect you a lot. So, it's just not the balance. It's the penalties and interest that catch people off guard. So what happens? Throughout the year, you are making these estimated tax payments either on your W-2 or you actually go to the IRS website and make a payment. And as I said earlier, at the end of the year, when you file your tax returns, if you underpaid, you pay the difference at that time. If you overpaid, you receive a refund. But you want to make sure, if you're a business owner, for example, that you have to watch your cash flow. Therefore, you have to make projections throughout the year and make those estimated payments accordingly. If you, for example, decide at the beginning of the year, this is how much I'm going to pay on the due date for each estimated payment, you can make those adjustments. You don't have to pay the exact same amount every time. So you can base your estimated tax payments, for example, now in 2026, you can make your estimated tax payments based on what happened in 2025 and how much you had to pay taxes in 2025. You can make some projections for 2026 and make the estimated payments accordingly. But throughout the year, you need to sit with your tax professional, with your CPA, with your accountant, to make projections through the year and make adjustments based on the income. If your income is going up, you can adjust the payment up. If your income is going down, you can adjust the payment down. And that would also help your cash flow throughout the year. You don't want to overpay. You want to pay enough. You want to make sure that you pay what is due to pay and don't overpay, don't pay too much. And we have seen that, unfortunately, in some of the clients, that they make the estimated payments based on prior year. They don't look at projections throughout the year, and they don't make adjustments to those estimated payments. And then the following year, for example, they had a much lower net income than the year before, and therefore they pay way too much money to the IRS ahead of time. Yes, they will receive a refund, but at the same time, that's money that could have been in your pocket throughout the year, and you could have been using it for other things, to make investments, to have cash, whatever the case may be. But it's much better for you to have that cash because that is yours than overpay it to the IRS and then receive it. So clients are often shocked, not because they owe taxes, but because they were not prepared. If you work with your tax professional throughout the year, you should already have an idea of how much you have to pay in taxes when it comes to time to do tax filing. So now we're in 2026. You should be meeting with your accountant now at the moment, working on projections. By the time April, March comes and you have to file your taxes, you will have already an idea of how much you have to pay. So tax season should not be a surprise when you see your tax bill. So it's not how much you made, it's about how you plan for it. You have to plan. It is important. It is May at the moment. We just completed tax season for 2025. This is the time that we work with our clients for 2026, and this is when we start working with them throughout the year. You start making projections, you start making sure you evaluate to make sure you're making the correct amount for your estimated tax payments. Let me go back and touch again on the W-2 side. So if you're a high earner and you receive, you are a W-2 employee in a company, for example, those tax withholdings that you see in your paycheck every other week, semi-monthly, those are your tax prepayments. But as a W-2 salary, high salary earner, you should also make sure that throughout the year, they are withholding enough money from your paycheck to make sure that when it comes to file your personal taxes, that you have paid enough throughout the year, and that you don't see you don't expect a huge tax bill to pay once you file your taxes in April, because you can make adjustments to the withholdings in your paycheck. You can put additional amount, whatever the case may be. And just like to business owners, you can also adjust those payments throughout the year. Once, let's say in September, you can make a projection for the Q4 based on bonuses that you may have received throughout the year, based if you're a salesperson, for example, for a company, you receive commissions. By September of October, you should be able to make projections on your commissions or your bonuses, whatever the case may be, by December. And at that time, you can adjust your estimated tax payments or your withholdings from your paycheck. So this is very important. Again, this video is not only for business owners, but this video is also for high earners that are W-2 employees. And it is also your responsibility to make sure you look at those projections with a professional throughout the year to make sure that you don't have a big surprise when you file your tax returns the following year. So the IRS expects consistency, not surprises. As I mentioned before, the IRS expects these payments throughout the year. Quarterly payments help you stay compliant throughout the year. And if your income fluctuates, this becomes extremely important, like I said. As I just mentioned, if you receive a huge commission payment, if you're a realtor, for example, same thing. If you're a realtor, you should be definitely making these estimated tax payments throughout the year, and you already have an idea of how much your commissions are going to be for the year. So you should make the estimated tax payments accordingly. We don't guess in taxes, we project them. As tax professionals, this is the best value or the most value that we can provide to our clients, is those meetings. Every month, every quarter, semi-yearly, whatever the case may be, this is when we speak about these projections. And these are one of the conversations that we will always have with our clients. Are you making estimated tax payments? How much are you paying? Let's make sure that you're paying enough. So again, if you're making over $250,000 a year, this is non-negotiable. This needs to happen. You have to, if you're a W-2 employee, you have to be paying attention to your withholdings every time to make sure that you're paying enough. The higher your income, the less room you have for mistakes. And again, I mentioned this at the beginning of the video, but don't forget that if you don't pay enough taxes throughout the year, you will receive penalties and you will receive interest, and that is all calculated in the tax return. I have experienced also where a lot of clients do not realize that because maybe their accountant didn't point it out to them at the time that they provided their tax returns. It's a thin line underneath your amount that is due that tells you the penalty, and you can look into that. So owing taxes is not the problem. Believe me, I understand. That means owing taxes means that you're making money. So let's say that again. Owing taxes isn't the problem. That means that you're making money. The problem is that you're not prepared. The problem is being unprepared. And how do you prepare? By making projections throughout the year, by sitting down with your tax professional to make sure that you understand what the numbers mean, to make sure that you know your projections, to make sure that you have enough cash throughout the year, and especially when it comes time to file your taxes at the end of the year. Will you expect a refund? Will you be expecting to maybe net out, or do you think you will have to pay at the end of the year? So again, the goal is not to overpay, is to pay correctly. We review numbers throughout the year and we make adjustments. That is a must. And this keeps your cash flow under control. If you're not sure where you stand, now is the time to take a look at that. You may contact us. We can have a consultation where, again, we will look at the projections to see, this is May, almost half of the year. We already know what happened the first half of the year, and we should be able, based on that, make projections for the rest of the year. And definitely this is something that we can help you with. This can be another video, another topic, but if you're an S corporation, are you paying yourself as the business owner a reasonable compensation? Those are all items that may not make sense to you, but that your tax professional needs to talk to you about it and bring it to your attention, because that is our job. We are the experts in the matter. So that's why we have to have these conversations with our clients. And again, our clients would be ideal clients, business owners, and high income earners, or a combination of both. So this is my video regarding quarterly estimated tax payments. If you have any questions, please give us a call. We are here to help. Again, we are the subject matters, the experts in the subject matter. We are the ones that need to put this, information in front of you, speak to you about it. You don't have to become an expert about the theme, but you have to know about it. Business owners, this definitely affects you because you can be a W-2 employee in your own business, but depending if you have a really high net income at the end of the year, you have to pay income taxes and that as well. So please give us a call and good luck.